All right, so now we're going to get to the stock market here as we switch over. I still have the bond market up here. We'll go to SPX. So we show this a little differently now, and I presented this over the last couple of weeks. And first thing I want to show you again, the slim ribbon right over here. Here's where it turned positive right over there. It gave you this enormous rally as you moved up from this point from around 31.40 all the way up here to about 35.8811. Not about, but exactly. And here you can see all the buys coming in right there. The only thing is that this now has turned neutral. So this green now will go away, and then we'll be waiting to see whether it resumes or whether this does turn red. So we have neutral momentum in here for the first time here all the way back since June. So we have July, August, part of September staying positive the whole way, and then turning into this neutral momentum right now. That is illustrated right over here in these notes. You see when this structure was built here for the last cycle, we were in a positive bias and a positive cycle structure. Now we are in a neutral bias that we look at here in these time frames, and the cycle structure is neutral. This middle one right over here really sets you up to a top half and a bottom half channels, which gives you the sense for if it gets up into the top half, it's a little stronger. If it only trades down in the bottom half, it's definitely weaker. And it's a neutral structure, so it basically points overall sideways without pointing to a higher high during this time frame right over here. Now we don't see the cycle anchor point is not confirmed right over here, and you know what I believe is that we could still get a throwaway here for a day or two, and then we'll have the anchor point set, and then these will all change right in there. But I want to put it in here for today so you get a sense for what this looks like. A bottoming right in here. Here's your apple that's getting sold off right today, looking for a bottom. It's trading near 110 right now, and then turning up. Of course, were that to happen, it would help the stock market when that happens. And you can see that what we're looking for in here over the next couple of weeks is maybe one little finish in here to the downside, and then getting into some rally, which gets you into this declining resistant sell zone and then turning down again. If the market happens to do something unusual, and that would be create a low in here, get a rally, and then break the low in this next time frame, in this next cycle here, and it does it early below whatever the cycle low is in here, you can see right over here that cycle low. I'm just going to move that because since I put it in, it's now getting down to that last cycle low right there. And when you see the cycle starts right over here, and now we're exactly the same level. This is neutral. If this breaks this, there's a potential we would be lowering these, of course. And what this is setting up for what we think would be a failed rally over these next several weeks. So what we're going to look for in here is stock market finding a bottom, then getting a rally and finding itself in some sort of a modest couple of week upside. Right now this is pointing for about 34.28 to 34.60. But these prices are getting lower, so these are going to decline a little bit, and then after a week to 2 weeks of attempts on the upside, then the risk starts to pick up again out over here. We have the cycle structure in here is more negative in the NASDAQ and a little more positive in the Russell, but overall they look pretty much the same, and you can see this declining phase right over here aligns with the intermediate declining phase that we have showed you for a long time that takes you into the early part of September, and that all really is we're getting ready to bottom in here. So we think if they throw them away for a day or two, they'll be moving up again. But these prices right now are falling by a little bit, so we're going to project up to about 34.20 over the next couple of weeks. in a rebound that would be about 100 points off of this low. And if this gets lower, we're just going to lower it by that same amount in there. So we'll be updating that for our members, of course. So a little bit of a rally starting in the next week, beginning and getting up for maybe a couple of weeks, and then not able to get through this resistance area is what we see. This is the upside were it to become very, very positive. We think this is a lower probability in there, and that the highest probability will make a low and it will track up in the bottom channel that you see right over here. That's what we think is the highest probability. This is cycle analysis. For those of you that are watching it for the first time, we're looking at this cycle right over here as the dominant cycle. This is the minor cycle right in there. You can see the minor cycle low that came here in this very, very strong cycle that occurred there. And now a much more normal pattern as you had this pretty good break over there, and we think we're going to start to get into these more normal patterns with the upside that you see in this upward movement right in here now giving way to this neutral momentum that we see right in here. And, you know, if it sells off real hard, this momentum could go negative, but it's kind of late and we don't think that's going to happen. So some of the evidence that we see, intermediate patterns should be bottoming pretty soon in the next days. The intermediate NASDAQ is topped. So we have a battle going on as we have the S&P 500 likely to do better than the NASDAQ. And that really makes for the next 4 to 6 weeks, in our opinion, this rally, this sell-off, and the next rally as we start to move out towards the election time. We see that as kind of a choppy time period in there. The Apple bottom coming in there is likely to lead a tech into a rebound, but we think that will fail. And that the big picture that we see in the stock market, I think you really need to watch. What we put it out Thursday, as I said earlier in the show, it really, really gives you a great sense for how this stock market can be in a battle phase right now, where the techs try to rally and fail. They find other things to rotate into in value. They consider value, and this just choppy time that we think we're going to see in here, right over here, and extending out into this October period. And then we think come into late October or even into November, December, it could be a lot more risky. But you got to watch our Future Speak show on Wednesday. Thursday was our big picture analysis on the stock market. That's all for level 2, 3, and 4 members. If you do take our trials, which we talked about, you can then have access to all of that plus everything else we showed. And don't miss that announcement that we put out on the coming askSlim live chart streams that you think you've seen things that are fantastic. Well, this is just amazing. That is the S&P 500, the stock market, as we look for it to grope for a bottom over these next couple days and then get into this rally phase.